And I'm really excited to introduce the guest of today's podcast, Scott Lewis from Denver, Colorado. What's going on, Scott?
Doing well. Happy to be here and looking forward to our chat today and providing some value to your listeners.
Yeah, definitely. And I was just kind of reading over everything that you're doing, man. And I've been in real estate investing since 2013 and would love to just kind of hear your story about how the Spartan Investment Group got started. So take me back, man. I want to hear about you. What were you doing before real estate and what are you doing now?
So I think my real estate career, although I wasn't an investor by any means, kind of started when I was in high school. And I'd always had kind of a proclivity for the built environment. So my jobs in the summer when I was in high school was on a framing crew and then just kind of a general contractor that did kind of odd jobs all over the place. So we built a house, we poured a foundation and or poured a parking lot and just did kind of a bunch of odd jobs. So I just always really liked being outside in the real estate game, whatever it was. So then I went to college and I kind of continued that through my college career, and I framed in the summers while I was at Michigan State University. But then I got out and I got a really good job as a sales manager in a biotech firm, and it kind of, my real estate focus kind of went away for a little bit as I was working in the corporate environment, building sales and marketing skills and those general business skills. And I came back to real estate, not on purpose, but like many of people in 2007, I had purchased a condo in 2005. So became an accidental landlord because I joined the military. I quit my job, went and joined the military, but I still had this condo. So couldn't sell it. So to stop the bleeding, I just rented it out. So that was kind of my first foray in 2007 into the rental market, which I despise. I don't have any rentals. They're absolutely fantastic for some folks, but not for me. That one, and then a family home is the only two properties I have outside of commercial. And I still own that property today. I've had a fantastic tenant in there. She's been in there for a long time, and we kind of have this unwritten agreement that you pay me rent all the time. I never raise your rent. Let's keep it simple. Let's keep it simple for both of us.
That's awesome.
So that's kind of really where that started. But then in 2013, in 2011, my wife and I bought a row house in DC that we needed to renovate. So I got back into the construction game. I did use a GC, but I went through all the planning and permitting myself, and I worked as kind of a site supervisor over my own project with our GC. And that was really what kind of kicked off the next phase of the real estate game for me. And really what started Spartan Investment Group is there was a house that was right next to mine, and it was a really rundown row home. And I didn't know it at the time, but I basically did a one property direct mailing campaign. And I finally got the owner on the phone. We made a deal, and I with a couple friends, flipped that house. We made a bunch of money, and that really is what seeded Spartan Investment Group.
That's awesome. So you did a one letter. You just wrote one letter and sent to that specific address?
No, not so. That was the only address that we were engaging, but we sent like 5 letters and then made a couple calls. So that whole thing of 5 to 7 touch points is true. I think it was our 7th touch point.
Wow.
And all I could scrape together at the time was $100,000. That's all I could do. And I called her. I got her mom on the phone, and I was like, "Hey, I pinged you a couple of times. I'm the neighbor here. I know the property, and I can offer you $100,000." They called right back. They accepted the offer, and it wasn't a smooth closing, but we got it done, and flipped the project, and it was a good project for me and my 2 investors, which were my best buddy and my father-in-law at the time. So the whole friends and family raise process, that's kind of what I did. And that's what really started Spartan Investment Group.
That's awesome. Well, hey, thanks so much for sharing your journey, and thank you for your service as well. I know, we talked a little bit before the show about you being in the service and serving our country, and you still are now. So talk to us about a little bit about that.
Yeah, I'm in the Army Reserves. So it's the 1 weekend a month, 2 weeks a year, kind of the commercial, although it never really pans out that way. It's always more than that. The Army has a great way of being like, oh, you can do this and this and this and this and this and this. But you know, I really love it. I was active duty for 4 years. I deployed to Iraq as an infantry platoon leader. Luckily, that experience wasn't horrible for me, and then was able to come back, and I joined the National Guard, and I've just been kind of the part-time warrior since 2010. So it'll be 13 years for me in February, and I really enjoy it. I enjoy the camaraderie. There's some amazing training that military folks go through. We use inside of Spartan, we use something called the military decision-making process. It's a structured way to make complex decisions in very unfamiliar or uncertain environments. I've taught it to my entire team. It's how we build. It's how we make really tough decisions on our real estate deals. So there's still something that there's still something that Spartan benefits from every single day from, you know, me being a part-time warrior.
That's awesome. And I want to kind of dive into that a little bit. So I don't know if you can talk about what the process is about the decision-making process, but I feel like we all go through that. It doesn't matter how successful you are, where you're at in life, you have difficult decisions to make. Woke up super early this morning because I've been kind of thinking about a decision that we might need to make in the next couple of months with our business, and don't really know what to do. So I've just been kind of praying about that. But what does that entail? I mean, can you give us a couple of nuggets of that process of what the military uses to make these decisions?
Yeah, absolutely. That's actually my job now, is I go train other units on how to use this properly, because it's you know, for your listeners that want to go read some military doctrine, it's FM Field Manual 6-0 Chapter 9 is where it lays out the military decision-making process. And it's,
That
if you
sounds
get
really
away from the
exciting.
Army,
Check
say
that out.
again.
That sounds really exciting to just, start digging in all that.
There's some amazing graphics that were probably drawn in the 70s and have not been updated at all. So it looks like we're like trying to like invade Russia. It's really funny. But it's if you take away the Army speak, the general concepts are there, and they're written that soldiers, which like me are knuckle draggers, can understand it. So really basically the premise is there's 7 steps. And, you know, one of the first things that most people, one of the first places that we see when I teach other units and when we use this inside of our business, that most people fail, is they don't even understand the problem that they're trying to solve. They get so wrapped around the axle about kind of the initial information that's coming in that they don't clearly define the problem, and they go about solving the wrong problem. So the portion of MDMP, was, as it's affectionately known inside the Army, is called receipt of mission. And there's an entire process on how you receive your mission. And a key component of that is defining your problem statement and really understanding, like, what the heck are you trying to figure out? And what do you need to do? The other kind of area that I see some folks not do very well is, through the process, you have to develop different courses of action. Kind of like, you know, let's just say you're trying to figure out what dinner that you want to go to tonight, because you can use the military decision-making process. It's probably overkill for figuring out what you're going to eat for dinner, but heck, you could use it, right? So when you're looking at courses of action and you're going to try to pick one of them, you have to know how you're going to evaluate those. So developing those evaluation criteria first, like right out of the gate. That's how Spartan made the pivot to self-storage. Is what we did is we came up with 3 evaluation criteria for the commercial asset. We made the decision, we received the mission, I'll say internally, of pivoting to commercial real estate, because we just didn't really like residential. It just didn't fit us. So we made the decision, like, yes, we were pivoting to commercial, but where to go? So some folks just start looking at different courses of action. Should I do apartments? Should I do storage? Should I do dog washes? Like, what are you going to do? And then they build the evaluation criteria later. Well, what's going to happen is all of us have something that we think is the right answer. And if you build your evaluation criteria after you start, you're going to get whacked with confirmation bias. All you're going to do is build evaluation criteria that point to the direction that you already thought you wanted to go, versus coming up with them right out of the gate. And for us, they were easy to operate, easy to maintain, fast to evict. Those were the 3 evaluation criteria that we analyzed all these different asset classes against, because that's what we said were the most important criteria inside of our company. when we chose investments. So when we went into that process, self-storage fell out of the bottom, and there's a big process about doing that. But I think those are the big things for your listeners, is to truly understand what problem to solve, and then come up with the evaluation criteria first before they figure out like different opportunities that they can explore.
Yeah. No, I think that's great. I'm actually getting ready to do a presentation on for a group that I'm in, a mastermind group, and they want me to kind of talk about that a little bit. On, we're, as entrepreneurs, we're chasing profit sometimes, and then along the way, sometimes we forget about what we're chasing and what we're trying to solve. And I think it goes along that same line there. Is just, what are we trying to do? I think that's it, because a lot of times we just start engineering right away in our mind. We come up with something, and then right away we start to try to figure out how we're going to do it. And we just go so fast, right? And we don't even think about if that's even what we want.
I think it's really important to figure out what to do before you start going out and doing. And Sun Tzu's got a great quote that tactics without strategy is just noise before the defeat. So often people get started and they just start doing stuff. There's a lot of, we'll just start hustling. And I personally don't buy that. Like, hustle without direction is just a squirrel like running around in your front yard, like going berserk as it's trying to cross the road.
Right.
So inside of Spartan, the first thing that we did is we created our mission, vision, and values, and they've shifted over the years, and that helped us drive our development of our first strategic plan, which laid out our overarching strategic vision for the company. 5 years later, even when we first got started, we developed that mission and vision and values, which then enabled us to build out strategic goals and objectives, which we've been working through for the last 5 years to finish them up. And we're now in a strategic planning year, and we just laid out our goals and objectives for 2020 to 2022.
Wow. That's awesome. Well, I'm glad that you went, you're on this show. I'm glad you went self-storage and some other commercial aspect rather than dog washes. That's for sure.
Well, it's funny I say that, because when I was doing my master's degree, we were in a class that was it was an entrepreneurship class, and one of the projects was a boarding kennel for dogs that was at the airport, so that people could just en route to the airport could just pull off, drop off their dog, and then go. And same way on the way home. The Denver airport has one, you pull up to any airport and there's always those like industrial places or whatever. And the Denver airport has what we called it boarding gate kennels. And they have something different, but it's right there. And I'm like, you see, that was a good idea. Because my wife at the time, when she was like watching me do the project, she's like, that's dumb. I'm like, no, look.
No, it's awesome. Actually, when you go to airports a lot, and I've been doing that a little bit more lately, is you always think of ideas, what they should put in airports. And
yes,
I don't know why they don't put in like fitness places. I always thought.
Literally was just going to say that, because on Friday, I'm flying back to Denver, and I have another flight later that day. So I land at 7 a.m. My next flight's at 11 p.m. That's 4 hours. I would love to hit the gym.
I know.
It'd be perfect.
Go, that's your next idea. So
yes.
Gonna call it Spartan. Just do the classes. Spartan Fit Airport.
That's right.
That's awesome. Well, hey, I want to get into kind of the transition. So you talked about rentals, number one. So everybody has their flavor on what they like to do, and I love. Sounds like the military really helped you create. Just think about it like a business. You talk about your mission, your vision, your values. And before we get into what you're doing now, I want to talk about why you decided not to do rentals. Because obviously when I think about commercial self-storage or RV parks, I think about, well, you're getting rent, right? And someone's renting from you in a little bit of a different way. But you said at the beginning of the show, you don't like rentals, which I assume is residential rentals. So what is it about residential rentals that you guys decided, you know what, this just isn't for me?
Yeah, so it's not single family. It's also multifamily. We don't do any multifamily. We don't do mobile home parks. And the reason is we don't want to do anything that is related to housing and is governed by housing laws, because that violates one of our evaluation criteria, which is easy to evict. Regardless if you're in the most tenant or most landlord friendly state in the country, it still can take, I mean, probably the fastest you could get somebody out is probably Texas, I'm guessing. And that would probably be 60 days. And they can destroy your place. You can't collect revenue. There's nothing you can do. Some places like in Chicago, they won't even allow you to serve eviction notices during the winter because they won't put somebody out, which I mean is rightfully so. I don't blame them for that.
We've had a lot of that in Indiana because it gets cold here too.
Absolutely.
About Christmas time, they say, well, we'll serve them 2 months after Christmas. And, so, yeah.
Absolutely. And that's fine. I don't believe that I should be providing a product to somebody and enter into a contract in which that other person violates that contract and they can keep doing it. And I'm prevented by an outside force from doing what I feel is legally right. And that's enforcing the contract. So with storage, with RV parks, those processes, they're not governed by housing laws. And there's ways to recapture. It's much, much faster in an RV park to evict somebody if they're not paying you. And of course, we try to act with compassion for folks. But at the end of the day, it's not housing. So it's storage and it's an RV park. So we're not exactly taking away their home because they literally drive it away. So it's not like we're throwing somebody out on the street, but
right.
That's really why we don't do anything residential. And I would say that I'm pretty against single family rentals as a whole. Now there's a million people out there that will counter that argument. And there's a million people out there that are doing fantastic with single family rentals. My thing is just return on time. It's very, very hard to scale single family rentals. And that's just really one of the reasons that we pivoted to commercial, because it's just a lot easier to scale. And you can scale in multifamily, sure, but that just violates one of our evaluation criteria, which is why we don't do multifamily.
I love how you talk about what you don't do, and you talk about it in a very matter-of-fact way that it violates your vision or your mission.
Yep.
So obviously, you've spent a lot of time creating this, and there's a lot of shining objects out there, especially when you get into real estate and you're in the game and you're doing it day in and day out. There's things that come in that look like good deals. I'm sure you get apartment building that,
yep,
this looks like interesting, or single family homes. Wow, that's a great deal, right? Maybe we should flip it and or something like that. And but it sounds like you're just very clear on what you're doing. No, that violates what we're doing. It doesn't matter what everybody else is doing. It just matters what Spartan's doing.
Right.
And I think that's where you started, right? Just kind of creating that vision, creating that clarity. And then, like you said, when you problem solve it, creating exactly what you want. And that's what Spartan's done, it sounds like.
It has. There's an interesting anecdote there that when you're very clear on what you're doing and you have those evaluation criteria, it enables you to ask the right questions. Mm-hmm. So we do own an RV park, and it's doing phenomenally well. And when our director of acquisitions first brought it to us, my initial response was, no, we're looking at storage, not interested. And he kept pushing, and I'm like, okay, then that's fine. How does it align with our evaluation criteria? Is it easy to operate? Is it easy to maintain? And can we evict people? He's like, okay. I'm like, go answer those 3 questions and bring me back the answers, and we'll talk about if the answers align with our vision. Mm-hmm. And they did. It's pretty easy to operate. It's not much different than storage. There's 116 spots out there. So it's a little bit more complex to do than storage, but in some ways it's easier, easy to maintain. Again, we're not responsible for anything above the ground. So all we have to do is make sure there's water, electricity, and a sewer line to each one of our spaces. And that's it. It's really simple. And to evict.
When you say RV park, I want you to describe that a little bit, because I actually think that you're the first guest that has talked about this. I've heard self-storage, apartment buildings, things like that, but RV parks, I have not. So, number one, there's RV storage, what that goes along with kind of your storage unit. Is that what you're talking about? Or are you talking about going to the state park and you see 50 RVs parked up and they're camping out? Is that what you're doing?
It's definitely not storage. It's not quite the latter. But yes, I am talking about a park where people pull in, they back their trailer in, they hook it up to the electrical, the plumbing, and the septic, and then they live in the park. This particular park I'm talking about is a little bit longer term. It's in West Texas, so it's based on oil. So there's some folks here that live a little bit longer term as they're out working in the oil fields. But yeah, so there's an office on site. There's showers. There's laundry facilities. There's a pavilion for picnics. There's a play area for kids. There's a dog run. But yeah, so that's
wow, that's interesting.
That's why it was one of those things that we almost said no to it. But when I asked the question, hey, how does it align with our evaluation criteria? It did. So there was really there was no way to argue against it because financially it made sense. It aligned with our evaluation criteria. So there was no reason for us not to do the deal. So we did the deal.
Awesome. No, that's great. Is there even a lot of RV parks in the United States?
I don't know the whole. I don't know the overall statistics. It's a pretty nascent industry. It's not institutionalized. Even storage is institutionalized over the last couple of years. But
yeah.
RV parks, I honestly don't know how many there are. It was kind of a one-off deal for us, and we're gonna have to edit that. The housekeeper is just about to come in. Nope, I'm all set. Thank you. Sorry, but so we'll start now. So it's a real kind of nascent industry. So I really don't know how many are out there, and it was kind of a one-off deal for us. We're interested in more, but it wasn't a planned acquisition. It was a targeted opportunity that happened to come in that was a really good deal and met our evaluation criteria. So we did it. Would we do another one? Absolutely.
Awesome. Well, sounds great. Well, I want to get into kind of the self-storage and the RV parks. You guys are obviously crushing it at these mostly probably self-storage and then the RV parks as well. But what is it so attractive? I think you mentioned it. Number one, easy to maintain. The evictions, not many housing laws that we have to go by with single family or apartment buildings. What are some other benefits of self-storage?
So I think really it's pretty simple to maintain or pretty simple to operate. You do have a lot of tenants. I mean, there's some facilities that have 1,200 units. So there's some RV parks that are up there, and there's definitely some multifamily that are up there as well. With storage, it's pretty easy to operate. I mean, folks don't come there all that often to visit their stuff. I mean, most of the time, sometimes it's a transition type thing where people are moving or they're getting a divorce. Sometimes it's businesses that are storing excess inventory there that instead of putting it in their expensive triple net retail or office space, they store it in a storage space. Which when you compare apples to apples, the rent is much cheaper in the storage than it is in say an office building. And it's just honestly, it's really easy to maintain. So sometimes in multifamily, you almost always have to do a turn on the unit, whether you have to shampoo the carpets or you have to paint, or, if you get a really bad tenant and they do some destructive damage, you got to patch holes, all that stuff. I mean, you're welcome to try to punch a hole in the concrete cinder block wall that is my storage. I mean, you can have at it. You're probably going to be not doing very much damage. So yeah. It's really easy. I mean, we can literally turn a storage unit. If the tenant does what they're supposed to do when they leave, and that's clean it all out and sweep it, we literally can turn it in seconds and rent it immediately that same day with doing absolutely nothing to it.
Yeah. Oh, definitely. What's the business part of it like? Because I know that owning a self-storage unit is a little bit different, where if I have a single family house or even an apartment might be more similar, but what's the business looking like behind it? Do you have to have staff, employees? Is that more difficult? Because I think there's the one part of acquiring a self-storage building, and the other part is obviously running the business, right?
So. Absolutely. You are 100% buying an active business that just is based on real estate, 100%. So you absolutely, well, let me caveat that. There's no absolutes there. There is a company out there that is doing 100% unmanned facilities. Now that's a little bit disingenuous because there's still a maintenance guy that's on staff, and there's still some roving management, but the vast majority of their staff is centrally located. That's a that's an anomaly in the business model. Most facilities that are larger, that are not mom and pop, there's some small ones out there. We have one that there is no people there at all other than a 5-hour a week maintenance guy. But let's talk about the 80% solution out there that is a manned facility. So yes, you do have to have managers. There's usually office hours. There's usually a maintenance guy that's there. And then like any other business, there's a full suite of business operations. There's marketing, there's advertising, there's human resources, there's administrative, legal. So, folks, I'm in another mastermind that is just self-storage specific. And I always tell folks there's people that come there that want they want to own a facility and be a passive investor. And if folks invest with a group like us, then you can own a piece of a facility and you can be a passive investor, 100%, no problem. Then you can throw your feet up on the beach and the checks from that facility just show up because we've taken care of all the operations. Mm-hmm. A lot of folks will go after third-party management, and there's some really good third-party managers out there that do a fantastic job, but someone still has to manage the managers to make sure that the books are right. Like, they don't do asset management, they do project management. So somebody still has to like review the numbers. They still have to make sure their managers are adhering to HR codes. Because if a third-party manager violates an HR code, you're the owner. I mean, yeah, you've got some legal recourse against the third-party management company, but some of them are pretty big. So good luck on that side of the house. So it's really, it's sometimes people talk about it as a passive investment, but really the only way to be passive in self-storage is to invest with a group like Spartan that then takes care of the management. Owning these things directly, I would argue there's nothing passive about that.
Yeah, definitely. No, I would definitely agree. And I think that's the best way if you really want to be passive is to work with a company like yourself. And let's kind of talk about that a little bit. So I think the biggest hurdle that I see from someone transitioning a single family to commercial, and you talked about a $10 million loan, is just kind of they think it's more complicated and the money, there's a lot more zeros attached to it, right? So it's almost like they think it's out of their league a little bit. So talk to us about that. How can someone, how do you work with investors, and talk about the money part of it and all that?
Yeah, so Spartan Investment Group, I mean, the way that we structure our deals is it's partial equity, partial debt. Some deals we buy with complete equity, just depending on the deal itself. And then we have, private individuals that invest with us, and we have both accredited and unaccredited investors because we do what's called a 506B offering. And that allows folks to come in and be a part of our deal. They're limited members when they come in, but they get a piece of the ownership of a particular deal. And we don't do a fund. We do individual projects. So folks will own a percentage of the LLC that then owns the property. So they're directly involved. They're passive. They don't have to do anything, but they are directly involved with that project.
That's awesome. So, so is that kind of like how you raise the money? Is you work with partners, and then how do you find people like that they're interested? Has that been just kind of a long process, or?
It has.
Yeah.
So we have 1,200 investors on our list now, and it's folks that we've met. It's folks that we've been introduced to. It's folks that have heard us through podcasting. It's folks that have seen our articles written in magazines and journals. It's folks that have seen us speak on stage. It's just kind of really getting out there and trying to not be the best kept secret that nobody knows about.
Yeah. I think it's one thing about having a great product, but then getting people to know about it. That's like most of the battle right there.
Yep.
That's awesome. Well, guys, if you're listening, we're talking to Scott Lewis, and all the show notes are going to be in our website at simplewholesaling.com/episode 194. And this is great information. Thank you so much, Scott, for just joining us today. Before we go to the next section of the show, I want to ask you, is there any other advice that you give investors? I know that you're not a coach per se. I know you help a lot of people through podcasts and the articles that you've done, but what's kind of the advice if someone wants to transition from the single family space to more of a commercial space?
I would say that develop your evaluation criteria. What is important to you? and start there. Otherwise, you'll be a squirrel running around, like trying to listen to all like different podcasts and just getting like really confused. The first thing is to get real clear personally on what you value. Some people really love the idea of providing housing for people. That's what they love. We've had investors that have said, hey, we're not interested in you guys because we don't see the value proposition in storage. And we have other investors that are like, we love storage because it was the best recession proof asset, except for medical office, through the last recession. So like, honestly, we want to protect our capital. So we love self-storage. So just really like understanding like what is the most important thing to you as an individual. That's the first thing you do. Get clear on that. Then go look for the asset class. And that's how we did it. And that's how we made the pivot very, very fast. And we have not pivoted away from it in the last 3 years.
And asking those tough questions.
Yep.
And that's awesome. So, well, thank you so
Be
much.
honest with yourself. Like there's no wrong answer out there. Some people may be like, oh, we don't want to, it sounds great to say that we never want to evict anybody, but in reality, is that true? Don't worry about what the rest of the world thinks. Figure out what's right for you, and then find the space that you can operate with your values in.
Definitely. Love it. It's awesome. Awesome notes right there, guys. Check it out at simplewholesaling.com/episode 194. This is Scott Lewis. And Scott, we're going to go into the section of the show that we like to call it Going Deep. And we've actually had a lot of veterans on the show, and I love talking to veterans and people who just have that servant's heart and have that servant leadership. And you've been able to do that with everything that you've done, even in this Spartan Investment Group. So I want to talk about you, and you're very clear on what you do. So you have this business, it's humming. You're in Texas right now looking at a project, and things seem like they're going really, really well for you. But I want to talk about more of your personal vision. So for you personally, do you have some clarity on that? Because what I've seen a lot is entrepreneurs, they get pretty clear on their business vision and what they want to do. And along the way, it's for something personally in their life, but then sometimes they forget about that. So talk about your personal vision.
So my personal vision hasn't changed from day one. And it's one of the reasons I started a business. I really like real estate, but I could care less. I honestly, like if I'm not waffling, but on my personal side, that if an amazing opportunity like stumbled on to produce, a widget for, X industry or whatever, and it was an amazing opportunity, then we would potentially look at pivoting. For me, it's about building a business that provides a place for our team members to grow professionally and personally inside the business. And right now, we want to make sure that we also take care of all of our investors. So I gave a speech at the Best Ever conference in Denver last year, which is a fabulous conference. So your listeners should definitely check it out. And I opened the conference with starting with why. And I really talked about, the reason why I started Spartan was to take care of my friends and family, because that's kind of what we are. We have 2 married couples working in the business, and we've got a lot of friends that we've been able to bring into the business. And equally as importantly, we have investors that I've known for years. So every day I go to work knowing I've got 2 friends that I've been friends with for over 20 years that are now our investors. I know, like, unequivocally that that my actions day to day earn them a return, and they are using that return to fund their kids' 529s. There are very few people out there that I know that get to go to work every day and help their friends put their kids through college. So that's kind of my personal thing. And my wife works in our business, and my, good friends work in the business. So my partner and I have created a kind of an ecosystem and a corporate culture that really enables people to grow personally and professionally. And that, for me personally, is why I get up and do this every day.
Love it. Love it. That's awesome. That's awesome. That's good stuff right there. And just kind of shows your heart. And I just think that's awesome. Yeah, you're exactly right. We have friends, but not every day that people get to actually help them, right? Help put their kids through college, help them with their finances, help them with their retirement. And I just think it's a great way. And as entrepreneurs can definitely do that. The next question that I want to really just go into is kind of talk about, what that freedom looks like for you. Are you going to continue growing this business and just continue doing that? Or a lot of times, people really talk about that freedom, and that's kind of their thing. But obviously, as a man in the service, you talk about freedom, right, in different ways. But what's that look like for you in business?
Yeah, we absolutely are going to keep growing Spartan. And while I said we're looking at, we're constantly assessing opportunities. We all love the real estate game. We love property. We love the wealth that it's building, and we have no plans whatsoever to pivot away from that. And we want to grow this business, not for the sake of growth, but to grow the business so that we can, do more deals. And part of that is mitigating risk. A lot of folks, they chase the opportunities, but they don't necessarily do a great job mitigating risk. And for us, the way that we look at mitigating risk is making sure that we have the team that's the right size, that we can effectively mitigate the risk to our standards, which are a lot higher than most. Our due diligence checklist has 645 items on it that we go through and look at it every deal. And really, we need to grow our team to be able to do these investments safely so that nothing is getting overlooked and that they're being run to the top levels that we can. So we have absolutely every intention to grow the business. And freedom for me, I'm not a hey, I want to retire at 30 guy. You hear stories all the time of young tech billionaires that then are these super miserable people because they've achieved everything they want by the time they're 30. Mm-hmm. That's not me by any means. I'm well over 30. But for me, freedom means doing what the hell I want to do. And right now within my business, yes, I've got to answer to folks. We all do. But for the most part, we get to do whatever we want to do. And we've created the company that if you're getting the job done, then go do what you need to do. So that's really kind of what freedom means to me. And I've achieved that wholeheartedly with Spartan. And I think our team members have achieved that too, because we have some constraints, but not much. We have unlimited leave. We only have set office hours. We don't come in on Mondays and Fridays. So we provide a really good culture for people, but we expect an awful lot. We demand excellence, and we demand that the job get done. With freedom comes responsibility.
Yeah, definitely. I love that. Well, I love your heart, man. And again, just thanks for sharing with us today. I think that our listening audience got so much out of this interview. And for me, there's always kind of that next step. We have a lot of listeners too that have flipped some houses or wholesaled some houses, even bought some duplexes, triplexes, multifamily. And maybe they're looking for that next step. And this is very attractive, and just kind of taking that leap. So again, if you guys are listening, you want to reach out to Scott, check out, we'll put his contact information in our show notes at simplewholesaling.com/episode 194. And Scott, we're going to end today's show like we end every show. And I have prepared a few random questions for you. So are you ready?
Sure. Yep.
All right. Number one, when I was looking at your bio, you seem like you have quite a few degrees. You went to Michigan State, went to a couple other places, got a few degrees. So this is a random question, but if you could get a degree right now and you didn't have to worry about money or time in order to get that, what would that be in?
I would do, and I actually looked at doing this, and it's not the money, it's the time that got me. But Denver University has an executive master's in real estate. And it just looked like a fabulous curriculum. If you're an undergrad, if you're a young listener, DU also has a really amazing construction management program. So I would definitely look at that just to get some more education there. I'm a big believer in a balance of education and experience. If you're overeducated and you have no experience, I'm like, if you have just tons of experience, but you don't necessarily have the education to go with it, I'm kind of like, I'm a big fan of a blend there on that, so that you can leverage both to reinforce one another.
Definitely. Awesome. Number two, what is the most useless thing that you know how to do?
Well, that's a
Everything.
fantastic question.
Everything's useful.
No, I mean, that's wow. I'm completely caught off guard on that. What do I?
It could be a hobby. It could be, I don't
No,
know.
I'm trying to think. That's a fantastic question.
We can skip that one if you want.
Yeah, let me chew on that for a minute.
I was gonna say when I live in Indiana, so basketball is pretty big here, and I learned how to spin the basketball on my finger, and I was like, you know what, that's pretty useless. But anyways,
I don't even know how to do that. So, what do I? Let me think about something that I do that my wife hates.
no problem. Hey, we'll just go to this next one. This is the last one. What do you think is something that most people get wrong? Like, I don't know. Do you have any ideas that most people, the way they think is they just kind of get it wrong?
Yeah, I'm glad you asked this question. I'll tailor it towards the investors that are listening to the show. Most investors, they chase the financials on the deal. They look at the returns, they look at the numbers, the cash flow. None of that matters. All that matters, in my opinion, is the sponsor. You have to pay attention to the sponsor and not necessarily the syndicator. Pay attention to the sponsor. There's a lot of syndicators out there that are raising money right now, and their values absolutely matter, but they don't control the deal. You really have to look at the sponsor, and is that team a team that you want to be part of? Are their values aligned with yours? Because I'm in a couple deals right now, and the sponsors are terrible, and I'm going to lose a couple $100,000 because I, in my early days, chased after the numbers, and I didn't do enough due diligence on the sponsor. My business partner is in the exact same position with a different sponsor. He chased the deals instead of the sponsors. Luckily on that one, I looked at that sponsor, but this guy looks like a dirtbag. I wouldn't give him a wet sock, let alone money. So I moved away from that, but I made the mistake on another side. So it's really about doing the due diligence on a sponsor, and Spartan has on our YouTube channel, Spartan has a webinar on how to do due diligence on a sponsor. So if your listeners want to go there, they can. And that's really the really important thing to protect yourself on an investment, because a good sponsor can take a crappy deal and turn it around, and a bad sponsor can take the golden goose and shoot it in the face.
That is true. That is true. And one thing I think that you're really good at, it sounds like, is mitigating risk. And I think people don't do enough due diligence on that. And that's exactly, I think, Scott, what you're talking about here is, even as investors, don't always look at the bottom, what you're going to get, what the return is. And I think exactly right. A lot of people just look, what am I going to get? What am I going to, what's my return going to look like? And, but who are you putting your money with, right?
100%. Protect your downside. And the best way to do that is to invest with a team that has a track record, that has good processes and systems in place, that understands their values. All of that stuff matters a lot more than the financials, because the financials, the pro formas and the Excel spreadsheets, I mean, that's the best that can be projected. But if you're starting with flawed fundamentals from the team, it doesn't matter what that Excel spreadsheet says.
Yeah, definitely. Well, I love that. That was a great answer, Scott. I appreciate you kind of playing on the touch of randomness there. And that's awesome. Well, hey, that ends today's show. Appreciate you being on this episode 194. And Scott, I want to give you one last opportunity to tell all of our listening audience out there, if they want to find out more information about the Spartan Investment Group, you in general, where's the best place for them to find you?
Yeah, they can go to our website, spartan-investors.com. If folks are interested in investing, there's an investor intake form there. They can fill that out and send it, and then somebody from our organization will follow up with them. If they're interested in anything that I said in particular, I can be reached at scott@spartan-investors.com.
That's great. And you guys are listening, and you can find that on our show notes at simplewholesaling.com/episode 194. And that's a wrap with Scott Lewis. Thank you so much, Scott. It's been an honor, man.
Thank you, Brett. Appreciate the opportunity of being on the show.